Good evening, everyone. Thanks for joining. Paul, how are you?
Hello, mate. Yeah, I'm good, thank you. How are you getting on?
Yeah, good, good. We have a bit of a low turnout so far. I think there's a football game going on. Um, but
There
let's
definitely is.
let's get going. And then maybe for those amongst you that are football fans, you'll get the end of the first half. So thank you for joining. So tonight's session, Paul's joining us. Paul, for those that don't know, is CEO and co-founder of C-Link. C-Link, if you want to think of best way to describe it is a procurement platform for construction services. So if you're looking to looking to automate your tender process, then you do that on C-Link. Paul can explain it in more eloquently than me. But by virtue of that fact, in building that software, he's a really good person to speak to about how you go about starting to build your own projects, and maybe not using contractors anymore. And I think in an environment where costs are rising, it's definitely something that people are looking at, perhaps where they didn't before. And it certainly makes potentially marginal sites viable again, by sort of cutting out that contractor cost. So it's not for everyone, and we're going to explain a bit about how lenders view it and how you go about preparing to do it yourself. But it will hopefully open some doors to those of you that are considering it. Paul, do you want to give us a bit of an intro?
Oh, you've nailed it for me, Ian. There's nothing else to say, mate.
Okay.
No, so as Ian said, my name is Paul Heming. I'm a co-founder of a company called C-Link. Originally, I'm a quantity surveyor by qualification and experience. I used to work on big major projects like Fenchurch Street, the Walkie-Talkie, the Shard, Battersea Power Station, those kinds of projects. Set up C-Link with another QS 5 years ago now, approximately, with the vision really of helping main contractors procure subcontractors as efficiently and as economically as possible with great quality, and stumbled into a little bit of a niche, largely due to rising construction costs, where SME developers actually also want to self-build, if you like. And we are now working with quite a lot of SME developers who are using our portal and, in effect, to simplify things, acting as a main contractor rather than employing a main contractor.
Brilliant, thank you. So let's get cracking. So
you want to make that game, don't you?
What's that?
You want to catch the first half.
Yeah, exactly. I'm a big Liverpool fan, mate. Can't you tell from the accent? I'm a Southern Red. I'm not really. So a bit about us for those that don't know. Hopefully you'll do. But our main reason for being is to help developers do more with less. We're designed to help developers get best value with their funding. We want to eliminate inefficient equity deployment. What we mean by that is most developers are putting too much deposit into each site. So our software actually shows you the optimum level of deposit to be putting into each site, so that you can maximize your return on capital. We make it easier for lenders to find loans, which makes it cheaper for everyone. Lenders regularly tell us that it takes them 3-4 weeks to underwrite a loan. Through Brickflow, it takes them 40 minutes. So they're a lot more receptive to our loans, and it's a lot cheaper to process. And as we said at the bottom there, if development loans are cheaper, more houses get built, which is good for everybody. So what we're going to cover today, rising costs. We all know they're rising. I've heard some horror stories this week about steel doubling, tripling each month. And there's probably a lot more in the pipeline as well. I'm regularly speaking to developers who bought sites last year at what was probably fair value, and now through the passage of time and the increase of build costs, they're now looking at sites which are no longer profitable or more marginal, and they're faced with the awkward decision of, do they just hold and wait until costs potentially come down, but there's no real end in sight. So they are starting to explore what we're talking about tonight, perhaps managing their own procurement to try and save some money that way. We'll talk about the different types of procurement, the opportunity that exists for SMEs, how lenders look at it, and then how you would go about funding it. So the landscape for costs. So this is over to you, Paul. So do you want to? I regularly hear horror stories of how things are rising. I'm sure people on the online tonight have got similar. What you know? Tell us about your experience.
Well, obviously, so our business effectively acts as a conduit between property developers or main contractors who are buying and subcontractors and suppliers who are selling. So we're effectively like a marketplace as well for construction work. So we have a really good handle on how much costs are going up, and they are going up significantly, sadly. And these stats that you have here are from the BEIS, so government backed stats effectively. And from January 21 to January 22, the cost of all materials rose by 21%. That's the aggregate. So your example, Ian, of someone who had a scheme that made a lot of sense in 2020 would have quickly found that maybe in 2021, 2022 now, that their construction costs have probably risen by in the order of 15-20%. Some horror stories, if you like a horror story on a Wednesday night, is around steel and timber. So steel's gone up 51% for that same period, and timber has gone up almost 70%, which is pretty ridiculous, to be honest. Wow. And sadly, from January 22 to where are we now? Almost May 22, at the end of April 22, steel in particular has continued to rise, and effectively it's a bit of supply and demand. Demand is pretty high at the moment, particularly off the back of the pandemic still, and supply is still playing catch up. And the recent issues in Ukraine have not obviously only put up the cost of transport through fuel, etc., but also one of the largest mills in Europe is in Ukraine, and it did, I think, last year 1.5 million tons of steel. That has obviously stopped, so that is actively causing a bit of a supply issue to the sector. And I've spoken with some of our steelwork contractors who, you know, in the past you'd ask for a quote, you might get a fixed price for 30 days, you might even have got 90 days a long time ago, but they're now talking about 24 hours, and some people are even talking about 1 or 2 hours for steel work, just because that is how crazy the market is for them right now, which then impacts the main contractors, the subcontractors, and of course the developers, everyone here.
Yeah, I mean, if you're a main contractor, how do you protect against that? Because we're speaking to, I've spoken to 2 people this week who've got quotes from main contractors, and they've been told that the quote is guaranteed for 10 days. Yeah,
well, I mean, it's difficult. That's one way of managing it. Obviously,
are they just adding a lot more in to sort of cover, or
they will be adding in on steel and timber specifically a lot more in. They'll be hearing from their suppliers that in June things are going up again. They'll go up at the end of every quarter. I was speaking to insulation, went up, I think, I'm not going to quote the numbers, but it went up significantly in March, and they've also penciled in like a double increase again in June. So it's all about supply and demand really, and there isn't enough supply, there's a lot of demand, and then when you add all the other things on top of it, it's been the perfect storm really. You couldn't script a little bit of Brexit, a little bit of a pandemic, and then a war on in Europe. It's the perfect storm has caused all of this.
You're spot on with the material costs as well, because one of the schemes we're looking at the moment is we looked at their appraisal from March last year and March this year, and the build costs are exactly 20% higher, and really? And because going back to what we were saying, where it was a really good buy that they made for this site last year, and I mean the profit looked fantastic. we modeled it all on how much equity they were going to need to put in. They bought the land on a bridge. The idea was then to roll into a development loan. There was going to be no more equity needed. Now they're having to put a bit more equity in, and the conversation is never great when you're having to sort of explain that to a borrower that they now need to find more money. And they looked at it and said, why is that? And I said, well, look, this is the simplest way to explain it. Your GDV from March last year, March this year, it's gone up by 4.5%. That's great. Right. But your build costs have gone up by 20.8%, I think it was. So, pretty much bang on your 21% you're saying there. So, that's where the difference is. And for the guys, it has gone from what was a very profitable deal to now a much more marginal deal. But what they have done is a gross maximum price on their project. So they're doing a GMP contract, which hopefully does protect them from some of these sort of unknowns.
Yeah, makes sense.
Okay, so we've got rising costs. What are the different procurement routes? So number one.
So I'm a boring QS. I mean, I'm unashamedly a boring QS. So I'm going to talk to you briefly about like kind of what we learned at the start of our careers as QSs and the different procurement routes. So number one is the traditional route. So this is kind of what the industry was founded on, where it was very architecturally led. So you would have an employer, i.e. a developer, employ an architect. The architect would be completely responsible for the design. They would then find a builder to be responsible for the build, and the architect would manage it. You'll have heard of like CAs, contract administrator. That's where the architect administers the contract on behalf of the developer. It's kind of like the traditional route that we have as an industry. I think the second procurement route on the list is one that will resonate with absolutely everyone. Design and build. So design and build is kind of what came in, I think it was like the late 80s, came in as a new way of contracting, and it kind of makes sense, doesn't it? That if you're going to buy the build off someone, you also buy the design off them. Effectively, an architect does not a concept design, but does a design that is then to be completed by a main contractor, a design and build contractor. I think that's one thing that many people confuse, many SME developers confuse, is that with design and build, you're actually handing over the keys of your design to the main contractor, and the main contractor is quite rightly motivated by their own margins and their own timing. So in doing design and build, although it's a quicker way to get yourself built, you are handing over the keys of the design. Just thinking about how traditional design and build work, they're quite linear in terms of timing. So you will have a design period of, let's say, 3 months. You'll then have a tender period where you tender with those contractors for, say, another 2-3 months, and you'll then have a build. So you might have, in that example, a 3-month design, 3-month tender, a year build, so 18 months. Construction management, which is kind of what all of the big house builders do, and it's what anyone who is a developer who uses C-Link does, so I love it, is a completely different route, whereby whereas with traditional and design and build, you employ as a developer a main contractor to manage the design, the build. With construction management, you don't do that. You employ the ground worker, you employ the brickworker, you employ the fit out contractor to do things direct. With that, there are things that you need to put in place, which I think we're going to talk about, Ian. But what you get is you retain complete control of the design. So your product, you get to design it, you get to stay close to it. You won't have someone else choosing the door handles, etc., etc. You also get that linear nature of a program. It's not 3 months, and a year. It's more like 1 month to do like the ground and superstructure design. You'll then tender it, you'll then start building it, and then everything will follow on. So it's a lot quicker to do it. And as we'll talk about a little bit later, it's actually a lot more economical, short term, and especially in the long term, for developers to do it that way as well.
Yeah, I mean, one of the things we always talk about is the compounding effect of developments over time, and we talk about minimizing equity and the compounding effect of that. And I mean, this is another way that if you look at, we always talk about a developer might develop for, say, 20-25 years, which if you're running one scheme at a time is potentially 10 schemes, right? 2.5 years per scheme. So we talk about running multiple schemes at the same time to be able to maximize the career, if you like, and the return on capital. And this is just another way of doing it, is if you're, I mean, we can talk about how much you might save, but if you're saving 10, 15, 20% each time on your build costs, then actually you put that over 10 projects, or even 20 if you're running 2 at the same time.
Yeah.
Then those figures are massive.
I agree. Well, I mean, I look at it as in speak to many developers who are our clients now, and say they do. A perfect example would be one who does £1 million of construction costs a year. They're planning on being a developer for the next 10, 20 years. So if you're going to do £1 million a year for 10 years, that's 10 million. Would you, at the end of that, rather not have saved 10%, £1 million in your back pocket?
Yeah.
I think, and then all the funding and everything else that comes with it, right?
Yeah. No, it's huge when you start looking at it like that. Okay, so it puts you in control, as you said. More of a headache, surely, more management, more time on your side. But we talked about the economic benefits. What are the downsides? Yeah,
so naturally, it does mean that you have to. If there isn't a main contractor, someone's got to replace the main contractor. What a lot of our, and that isn't simple. I'm not downplaying what main contractors do. You will have to employ a project manager. That could either be like a consulted project manager for a period of time, or someone you could employ in-house. I'd advocate for a project manager who can kind of manage the site and manage the commercial aspects. There's health and safety things that you have to do for CDM. Again, project manager will be relatively well versed in that, and it just involves, in my view, the employment of health and safety consultants and so on to help you with sporadic visits. And then usually you have to have an SPV as well, but having an SPV is not going to be something out of the norm for most of the guys listening. It's something that you'll be very used to. So really it's about identifying and finding really good resource in that project manager. Now, I'm not suggesting for a minute that is simple, because everyone in every business, I've been doing recruitment, not so, in the not so distant past, it isn't easy, no matter what you're recruiting for, and getting that recruitment right isn't easy. What I do think about it though is that effectively when you're doing the same with the main contractor, you are asking them to do the recruitment for you. Yes, you pre-qualify them, but we've all managed projects where a good main contractor perhaps has had a project manager that you're actually not so keen on, which doesn't help you deliver a great project. So again, yes, that is a difficult process, and yes, it comes with some cost, but employing that person to be into your business and then working for you on other projects, etc., I personally think it's worth it. Again, if you look at the long-term vision of where you want to take your business.
It's not for everyone, is it? But I do think for those that are, I think developers generally quite resilient people, right? And I think especially if you have got a background in construction, then it makes a lot of sense.
I think the lenders could make it a lot easier.
I do
to do it. And I think that is, I speak to many people who want to take on the challenge and see the strategic longer term view. It's not going to be easy, no doubt about it, but employing a main contractor isn't like you give them the contract and walk away from it, is it? That isn't particularly easy either. So I do feel like there could be more support and knowledge shared around lending to make it a simpler process.
Well, what's really nice about your platform is the way that you have so much DD on each of the subcontractors on there, right? So you have like all of their health and safety, you have their accounts, you have like previous projects, you have like peer reviewed. There's a huge amount of information on there, which when packaged up and handed to the lender is actually, it's done a lot of the work for the lender, hasn't it? It's given them the confidence that these people will perform.
Absolutely.
One of the other things I did want to touch on is I saw a stat not so long ago where I think 19% of all insolvencies in the UK are in the construction industry at the moment.
Oh, crikey.
Which is huge. And so when a lender's saying I want a main contractor on this, it does sort of make you wonder like what they're basing that on.
Yeah,
I know why they want it, but
yeah, to me again, that, and to me it strikes me that lenders don't necessarily understand the practicalities of a site in that regard. I appreciate that if someone goes bust, you don't want to have to then manage 10 subcontractors if you're the lender, right? You just want to have it in a simple design and build and hand it over. However, if the main contractor goes bust, you've got all kinds of problems versus construction management, because with construction management, if a subcontractor goes bust, you're talking about a small element, the painting, or I don't know, the M&E or whatever, and that is much more easily replaced. From a quantity surveyor's perspective, from someone who manages construction, I would find it much easier to do that than replace the main contractor and then all the warranties that are then tied to that.
Well, I think also as well at the moment with how how backed up everyone is, finding a new main contractor is I mean, I'm talking to people who can't get people booked in, unless they hit one particular window, and if the stars don't align, that contractor's moving on to the next project. And people having to wait maybe 6-9 months to get their preferred contractor. I think there is a bit of short-sightedness on the lender side, I think, for exactly the reason you just said.
You can change their mind though, can't you, Ian? A man of your stature.
Look, I mean, it can be done. We actually had our last session a couple of weeks ago was with a first-time developer, 0 construction experience, and he managed the project himself. So he had a groundworks team, he had a build team. It was a commercial property. It was basically a shed on a slab, so perhaps not as intricate as a resi build, but still, he was supremely well organized, up for a challenge. And I think the lender, when they met him, understood, saw that, saw the fire in his eyes, Paul, and decided to actually they give him the benefit of the doubt. So, but he had a project manager. A project manager came in, guy who's got 35 years plus experience, and he's been a great addition. And I think Ian, that's the guy who was saying that he was worth his weight in gold. Okay, so this is an example of a main contractor cost. Do you want to walk us through it?
Yeah, the reason why I wanted to highlight this is, again, I'm not sure that there is this is absolutely understood for developers. So I wanted to make it really simple on some simple terms, exactly what you're paying for. In my example, to make it easy, on £1 million build. So on £1 million build, you're roughly, and obviously this fluctuates project to project and contractor to contractor, paying say 10% for overheads and profit, 10% for main contract prelims, which will largely be management, health and safety, and the things that I described before. There will be obviously some sort of setup within that. So you're then left with 800,000, which is what I call the works, right? And so the majority of that 800,000 will always be subcontracted by a main contractor. Almost all main contractors do not do the work themselves. They sub it out. So of that 800,000, 720,000 is actually the work. It's actually the groundwork. It's actually the dry lining, the plasterboard, the plastering, yada, yada, yada. Another 8% of it, roughly, would be actually allocated to the groundworker having management, the M&E guy having management, etc. So they're prelim. So in effect, you're paying 28% of your £1 million is allocated to either profit or management that is not really managing necessarily in your best interest. So that's the reason why I kind of wanted to highlight it, so that people understand roughly what they're paying for when they're paying £1 million for the work.
That's a big number.
It is, isn't it?
So we could save nearly 30% on.
Well, I don't think
£1
yeah, I don't think that you can save the 30%. I don't think that at all, and we'll kind of touch on what you can save. But if you know that you're spending 28% on management, none of it is working for you. The subcontractor prelims, I think that you still need to pay, but then main contract overhead and the main contract prelims, if you repurpose that, oh, there we go. That's what we're looking for, isn't it?
Sorry.
So yeah, I actually think construction management
20%.
We are saying 20%, but you have then got, so you're not paying the main contract overhead and you're not paying the main contract prelims. You are still paying all of the subcontract costs. I'm not sure if on the next slide it then actually touches on. So construction management isn't simple. We've already kind of talked about this in terms of you would need a project manager, health and safety support, and SPV set up. I've put there that a project manager would be 70k because that is, I'm in London, and a senior PM who would be able to manage £1 million job at a canter, like really, really simply, is 70,000. So I'm saying I'm going to get you the best senior project manager going. To manage.
Okay, and that they'd be on site every day for that?
Yeah, they'd be on site every day, and they'd also be managing like the commercial aspect as well. So they'd be doing the procurement and accounts and so on. So
for a year-long build, I'd pay someone 70k, and they'd basically be managing the whole thing for me.
Yeah.
Yeah. Okay. Cool. And when does that start becoming a bigger number? So if I double to 2 million, is it still 70? If I, quadruple to 4, like where do we start?
As you start changing the volume of sites. So if you're changing to 2 sites, then you probably need to have 2 project managers. You might then have a project manager and a site manager who would cost you less to cover both sites. My belief is that on £1 million project, that project manager in this case is going to have quite a bit of spare time on his hands to actually help you looking at other projects, like doing your appraisals and so on, giving you advice in that regard. I'd say on a £2 million build, the project manager is still just the project manager. So actually, the numbers get better in terms of what you would potentially save.
So if I was doing a £4 million build, then I would still be paying maybe 70, maybe a little bit more, you think?
I think on a £4 million build, you might want a project manager. That project manager may want some quantity surveying support at that kind of a number. But that might be on a couple of days a week. And again, the numbers are much, much better at that point. You're going to save a lot more than the 10% on the £1 million.
Yeah. So I might be in for 100k or something like that on a 4 million build.
Yeah. Because I think if you go to the next slide, so what I'm actually saying is that you're not going to be paying, it's not 1 million plays 800,000. So you're not going to save 20% because you have the SPV, the project manager, and health and safety. And I think if you go on to the next bit, you'll see that what I'm actually saying is, and these are crude numbers, I would be honest enough to put my hand up to that, is that what you're going to be paying is, excuse me, is more like 900,000, which is the 800,000 of subcontracted costs, a senior PM who is going to be absolutely amazing, and then your SPVs, your health and safety, and your site setup. So £30,000 allocated to that, which would take you to that £900,000 number. So you're paying 1 million for the main contractor to do it. You're paying 900,000. You're saving 10% to do it yourself, and you have that £70,000 resource in your business doing other good things for your business. And if you don't want to employ them, you could, as a PAYE employee, I'm saying, you could potentially look at actually getting a consultant PM in the short term, and then they would potentially move to being a full employee thereafter, is what some of our clients have done.
Yeah. So you can do it project by project, or as you grow as a business, then you can actually retain.
How did that chap that you said has just done it and he got a PM, how did he do it?
So he actually wasn't going to use a PM, and it was actually lender pushback that said, look, we're not going to let you go. We're not going to approve this loan unless you use a PM. And I think, as he explained, the reason he wasn't against using a PM per se, but I think the people he'd spoken to weren't particularly strong, or perhaps weren't particularly interested, because the build on that one was about 1.2, no, but I think it's about 1.4 million, the build. And I think he spoke to a couple of people and they said, they just quoted really, really high numbers because they just weren't particularly interested. And then others were, I'll do it. I'll turn up, half a day a week, and I still want, £3,000 a month or something like that. So I think he was just a bit disillusioned with it. And I think he felt, which is one of the things that kept coming up when he was speaking, is he felt that because he was a first-time developer, he wasn't taken very seriously, and a lot of people were kind of just a bit snooty and just, you know, didn't really,
It's a busy market as well, right?
Yeah, exactly. Like, you know, it's one of those things, you got 20 jobs on your desk and you can only do 10, and it's, you know, people prioritize, don't they? So but he the guy that he found actually was through his network, and yeah, he was a lot more reasonably priced, and I think, you know, he feels now that, you know, he absolutely couldn't have done it without, but he also feels that whilst this guy has a lot more experience, he's also, you know, there's certain things he said and suggested which he's pushed back on as well. So he does feel like there's a good working relationship.
And is he PAYE employed, or is he like?
No, so he's a consultant, for this project.
Because I think when I talk about this with some developers, that's what puts people off, is, you know, have to employ someone, and that comes with a heavy fixed cost burden. But I don't think that's necessarily the way to go on your first project. It's identify a project manager who could be a consultant almost to your business, or a contractor. And it sounds like lenders are relatively comfortable with that as well.
Yeah, so I mean, we had another example not so long ago where we had a guy who had he'd built a scheme himself with two other shareholders, one of whom was a QSPM and the other was an actual mains contractor. So he'd been he'd put some money in. He'd also been the kind of admin guy either side. So he dealt with the planning, he found the site, and then he was dealing with the exit with the agents and what have you. But the main sort of build part of it, he was very much sat on the sidelines, and he was first to admit that. So when we came to do the second site for him, we funded that. He, on paper, he was doing exactly the same thing. It was 10 minutes down the road. It was 6 new builds, which is what the previous scheme had been. So on paper, he looked like the perfect client for most banks, right? Done 6 new builds down the road, on time and on budget, and now he's looking to do 6 new builds again. But, you know, the bank sort of picked up on the fact that actually that main sort of part in the middle of the build, he actually probably hadn't done much. And so what they did is they just said, look, if you can employ a project manager and incentivize him in this scheme, then that will make us a lot more comfortable. So the scheme, there was about £1 million of profit in it. And the guy, I think, was retained at 2,000 a month. And then he had a 5% profit share. So basically, if he delivered on time and on budget, he stood to make a 50 grand bonus.
I'm guessing he was pretty motivated to do that, wasn't he?
That's it, isn't it? And that's the point. And so this guy was self-managing, and you know, the lender felt that he perhaps didn't have the expertise. But if you think about that, I mean, in a 12-month build, £2 grand a month and 50k at the end, that's 74 grand, which is pretty much bang on what you're telling us. So
yeah, exactly. And you're winning as a client, right? Because that main contractor, you have no control over them. They are motivated by you, of course, but that doesn't mean that they have always got your best interest in heart every single day. Whereas your example, that guy who's got a 50k carrot at the end of the year is definitely motivated for you, and that is something I would completely advocate for. You can see why that would work, right?
Yeah, 100%. And he did. I mean, he delivered that scheme, I think, 2 months ahead of schedule. They were under budget. He sold all the units, you know, really quickly. I mean, bank was over the moon with him. I mean, it was just a really well managed
win-win-win
project. Yeah, exactly. And he saved the bundle. It's interesting actually, because the build costs on that, it's going back a little while now, but roughly speaking, I think the build costs were about 1.1 million. That's what he was forecasting. The bank's QS went out and forecasted 1.3 million, and we'll come on to this in a second. But essentially, the bank's QS is looking at it from the perspective of, if the bank had to step in, what would it cost them to get a main contractor to do it? So there's that, but we're back up to where we started.
There you go.
So they might want in your build loan allocation to have 1.3 million, even though you're only forecasting 1.1 million.
Fine.
And what that normally means is, if the build loan allocation goes up, is the land loan allocation drops. Now, in this scenario, what we did is the developer, the lender, and we got involved as well, and the QS. We all had a Zoom call because I think it was COVID times. We all had a Zoom call, and they agreed to meet in the middle at 1.2 million. So what it meant is that the land loan actually wasn't affected, because at 1.3, the developer's going to have to find another 70, 80 grand of his own money to put in, which he'd rather not do. But it also meant, from the developer's perspective, he actually had a contingency. So the 1.1 was his cost plus contingency. He then has another 100 grand in the allocation from the bank. So, I mean, he has to provide a personal guarantee, as all lenders will expect. But I mean, if that guarantee ever got called upon, I mean, we'd all be in trouble, right? Because he's got, at least 150 grand of headroom on £1 million build before he gets into a position where he'd have to top it up himself.
Makes sense. Yeah.
So how do lenders look at construction management? So they prefer mains contractors, and some lenders. We shouldn't do that.
I'm joking.
We work with a lot of mains contractors. And
So do I.
Mains contractors. They prefer mains contractors. Why? Because, as Paul highlighted earlier, it's easier to step into a contract or a project where there is a mains contractor. If something's going wrong, the lender has to step in. They're not developers, nor do they want to be. They just want to come in. They want to take control of the contract, assuming it's not because the contract has gone under, and they want to just manage it to fruition. So they do prefer it. Some lenders actually are still very resolute on this. I won't. Should I name them? I mean, Alpha One. They really like a mains contractor, I remember Barclays, they're the same. They very much like a mains contractor. We had a case.
Did they say why? Is it for exactly that reason that you explained?
Yeah, I mean, I think just for certainly a bigger lender like them, you can't imagine that there's probably the skill at that level to someone to roll up the sleeves and come in and step in. Yeah. They would outsource that, presumably. A sort of more entrepreneurial fund, you've probably got some development or construction experience in the management, and therefore they could see themselves getting involved if they needed to, take on a bit more of a hands-on approach. Whereas I think, especially for larger banks, where they're lending at lower margins, and as we all know, for banks, or maybe we don't, but risk capital, or the capital adequacy for banks against development loans is much higher than any other category of loan. So it is more expensive for them to lend on development, which is why they don't really want to do it. I think someone like that is just looking for a very straightforward, very vanilla deal. Where it's they also want the main contractor to have 3 times the contract value as turnover. So if it's a 5 million contract, they want 15 million turnover in the last set of accounts. So it's very regimented. It's very sort of cookie cutter. Whereas I think if you go to more specialist lenders, they're definitely a lot more open to it, because, like I say, they normally would have someone in the management team that has that experience themselves and perhaps has done it themselves. Okay. Costs are increasing, as we said. Margins are decreasing, so something has to give. We've talked about the costs of build materials rising, but also think about interest rates. Interest rates have gone up 3 times in the last 5 months. Most development lenders haven't yet passed that on to the customer, because the ones that track base rate have. Of the 38 lenders we have on Brickflow, I think 6 or 7 are base rate lenders. The rest make their own decision on whether to follow base rate. And some of those are LIBOR tracked as well. But again, a lot of those LIBOR tracking lenders had a floor of 0.75 during COVID, and and they've yet to sort of go above that in most cases. So the cost of development finance is going to go up. We wrote a blog piece about this a little while ago. I mean, if you think about a 1% increase on £1 million of borrowing, is £10,000 per million. You know, if you look at that on a £4 million build, which is kind of the average loan size for development finance in the UK, you know, it's £40,000 potentially of additional costs. So not only have you got inflationary pressure on the build material side, on the labour side, you've also got increased costs on the debt side. Now, the good thing about all of this is that in a perfect world, this would have a depreciating impact on land prices. That hasn't yet happened. We're still seeing land prices very, very high. But I'm speaking to agents on a regular basis who are starting to see that they are saying to landowners, look, if you are serious, you're going to have to take a haircut. You're going to have to reduce your costs, reduce your price. Otherwise, it's just not going to sell. So give it another 6-12 months. I certainly think you'll see more on that front. Anything to add there, Paul?
Not really, no. I mean, it's like you say, something has to give, because at the moment, absolutely nothing has given, has it?
Yeah,
quite the opposite.
Yeah, exactly. So, I mean, going back to what we were talking about before, lenders will consider self-build construction management if you have experience. So, if you do have a background with a big house builder, then you absolutely would be taken seriously by a lender if you wanted to go down that route. And if you have the right team around you, so you know, bring in someone that has that experience. Could they be a shareholder in your? So we talked about that example where the lender wanted the PM to be incentivized 5%. You know, maybe go one step further, get the PM to maybe put some money in into the deal as well. I mean, they were going to be even more incentivized, right? And if they're sharing in the upside, higher experience and consider incentivize them, like we've touched on. And if you have construction experience, then you have a much better chance. Right, so what I want to do just quickly is give everyone, I want to show this in practice. So what screen am I sharing, Paul? Am I sharing the slide still?
Demo, app.brickflow.com.
Okay, so I need to change my screen 1 second. So share. I need to share this one. Okay, so what I've done here is I've loaded up a search on the platform. So I've got a purchase price of 1.5 million. Yep. Got my purchase costs, which is all my stamp duty, all of these kind of things, 75,000. We're in the Midlands today. It's new build, it's residential. I'm building 20 houses. Yeah. My build costs, right? So I've put a build cost of 4 million there. My contingency 7.5. Got 24,000 square feet of build space. My build cost per square foot are breaking down at 180 a foot. I've got my professional costs and charges, which is all of these things here, at 400,000. Normally breaks down at about 10% of this number. Yeah, so it gives me total build cost of 4.7. And then on the borrowing, I've got a GDV of 8 million. Got build term of 15 months, loan term of 21 months. And if I hit search loans, we've got 28 different loan options that have come up. So at the top, we've got Linus. So we rank these in order of biggest deposit first. So, sorry, smallest deposit first, should I say. So they're quite expensive, but they want just over £1 million. My profit's 850,000. So I'm modeling this one as if it was a main contractor. Okay, and then we're going to change it to see what it might look like if I was to construction manage. Okay, I've got Hilltop there giving me a slightly smaller loan and slightly smaller deposit as well. UTB bigger deposit again, but better profit. So this is the highest return on capital. So that's probably the optimum loan on the platform. And then we roll down, we've got, all these other lenders here. And then we get down to the bottom and we've got Barclays here, for instance. So Barclays would want 2.3 million deposit. And my profit is actually not that much more than what UTB were offering. It's about £200,000 more, which you'd rather have, but I've got to find an extra 1.2 million up front to get into that deal. So anyway, we roll back up to the top and let's save this search as D&B Midlands. So this is my search. Okay. Now, if I change that search, let me just move you across there. If I now change that search, so what did we think we could save? Paul, we thought we were going to save maybe 20%.
10% if you're employing a main contractor as well.
Okay, so if
you employ a project manager, sorry.
Okay, so if I put an extra cost in here, so if instead of this being 400, I put this to 500,000. Yeah, so I've got 100,000 additional cost because I'm employing someone. But let's say we can cut my cost by what, down to 3.6?
Oh, that would be down by 20% on the overall build. Yeah, so let's say.
Okay, so 3.2. Yeah. Okay.
Yeah, exactly.
So if we have a look what that does, right, my deposit now is 600,000. So my deposit is half and my profit has gone up by 50%. So that's quite an impact, isn't it? So I can get into a scheme, much less deposit, I get much more profit out. I mean, let's not be as bullish, and let's say we're going to get 15%. Still has quite good impact of 707 deposit versus 1.6 of profit. So, really, like this is here for you to sort of play with, and you can model these loans. So I can now save that one as self-build 15% saving.
Amazing, really, the saving there, isn't there?
Yeah. And so I can save that one, and then I've got various different searches. I can send those to I would say send to a friend if you were. This is an admin version, but send results to another shareholder. So you could send that to your shareholder. But my point here is that just very quickly you can come onto the platform. You can have a quick look around and determine whether there is scope to do this. So if you're looking at a scheme, perhaps let's say we went back up to 4 million of build costs, and let's say our GDV was 7.5. Now we might be saying that 75 million. So we might be saying actually that this scheme is not that viable, right? So I've got to put in 1.6 million. I've got 500 profit. Return on capital is 20%. I mean, really, really not that attractive. But if we go back down to our self-procure, then actually it's a decent scheme again. So it is the difference. What we said at the top is about it being difference between marginal and profitable again. It actually could be. So
it's really good to see it like this, to be honest with you, Ian, because obviously I don't see things like this. I just talk about the construction side of things because I'm a simple QS. But it really does evidence why I know why so many of our clients are trying to move to this route, because it just is opening up many more doors. Yeah.
Okay, well look, that's for everyone to use and model their deals as and when they want. Let me run back quickly to our presentation. Here we go. So we're getting towards the end now, so you can rest easy if you're trying to get onto the football. So lenders on the platform. Here's a couple of case studies. people that have saved money. This is the one actually I was talking about where the guy had to do the 5% incentive. So he had an offer from a bank, and we actually reduced his deposit by 190,000, and we reduced his interest rate by nearly 1% as well. So he saved over 200,000 on that scheme by using Brickflow, but it was self-managed, and he was quids in. Some happy borrowers. Mandeep, I think he's on tonight. Mandeep, are you on? There's a good quote from you. Thank you. Happy lenders. That's what it's all about. Makes your life easier if you've got a happy lender. And this is our Telegram group. We haven't started posting on there. We want to get a few members on. So the idea of the Telegram group is for people to start sharing ideas, people start sharing their experiences, connecting with people, adding value, creating a community really to allow people to learn from each other, but also to ask us any questions and ask them of other members to see if there's other people that can add value. So do join that, scan the QR code, and we'll get going on that in the next week or so. If you want to book a call with me or anyone in the team, then there's a link there which John, who's on the call, will put in the notes. Paul, do you want to talk us through how you can help the guys?
Yeah, absolutely. So as mentioned, and as is probably quite clear, C-Link is a platform for anyone who wants to act as a main contractor to manage their procurement. We have main contractors who use it, and we have developers who use it as well. So what it will do is it will kind of give you an in-house QS to some degree. Our system builds tender documents for you. It helps break things down into packages, does your tender analysis. We have also got a network of hundreds of pre-qualified approved contractors and actually main contractors as well on our system, and they have to go through a really heavy vetting process. So we're trying to be the cream of the crop in that regard in terms of quality. And if you would like a demo of the software and see what it can do for you, I'll put a link to my calendar as well. And you can also contact me on paul@c-link.com as well.
Yeah, you got Paul's email down there. So yeah, please do reach out to Paul. Like, the software is great, and especially if you're newer to this way of building, then C-Link's like going to be a massive help. Like, it's a huge resource that, going back to talking about the guy that was on a couple of weeks ago, Ian Goodchild, he went to all these different people manually, had to find out for himself who was good and who wasn't. It took him many months to put together the team that he eventually settled on, and I think it could have been done a lot quicker on Paul's system for sure. And
one other thing I'll just touch on. I know everyone wants to go and watch the footy, but just very quickly,
Liverpool 4-0 up, by the way. No, they're not. I don't know.
They're not.
I don't know.
You had me there after last night's game, but we've also built a beta product called our cost planning tool. That tool is free for everyone to use and will help with anyone putting together development appraisal in terms of construction costs. So we have got lots of live costs going through our system. We've built a tool off the back of it. It's 0-0. There we go. We haven't missed anything. Should we go on for another hour, guys? Anyone?
Yeah.
But cost planning tool is something that will allow you in 5-10 minutes to get a structured construction cost on your project. It's based on live costs that go through our system, and I will share that with you guys as well in the chat. Feel free to use it. Like I say, completely free for you guys to use.
Excellent. All right, so we've got a few comments. It's 0-0. Tim said it's 0-0. Okay, cool. And Alan,
nothing.
Yeah, and Alan Edwards. Thank you, Alan. Ian and Paul. Two excellent presentation. Two excellent systems. Cool.
Thank you.
All right. Well, thank you everyone for joining. And if you've got anything that you want to discuss with me or Paul, then please do reach out to either one of us directly. We look forward to seeing you again soon. Thank you very much, Paul, for coming on this evening and missing the football.
Thanks for having me. Yeah, no, all good. Thanks for having me, and pleasure speaking to you and everyone. I'll see you
Thanks,
soon, mate.
mate. Appreciate
Take
it.
care.
Cheers, Paul.
Cheers.
Take care. Bye.
Bye-bye.